One of the tallest leaders in solar irrigation pumps, Shaktipumps India Limited. Shaktipumps, rich in experience, a strong market player, well known for its pumps and motors, also recognized for its solar rooftops. A mid-cap company with a modest market capitalization, revenue almost doubles in FY25. Sizable exports is an added advantage. With its eco-friendly product range, amply benefited from governmental policy on renewable energy, has been a leader in solar powered irrigation contracts under PM Kusum scheme, focused on in-house research, and against its application has been awarded 15 patents, many more in the pipeline. An order pipeline covering 2 quarters on an average is a great comfort on revenue visibility. A dominating equity over last 2 years and a very minimal debt, along with rising profits during the recent 2 years, rewards the company with a very handsome and quality return on the equity employed in its business. In keeping with its proactive approach towards market and technology, the company is diversifying into electric vehicle segment, taking along its motors and controllers. Investing over rupees 250 crore on EV motors and chargers plant on a 2-year timeline, almost doubling the current capacity under backward integration with a massive investment of over rupees 1450 crore on a 2-year timeline, also includes a plant for solar cells and solar panels built with the cells. The focus of backward integration is to have in-house manufacture for control of supply chain, quality and efficiency. During the period of 4 months between November 2024 and February 2025, the share price peaked to an all-time high in January 2025 before crashing back to the base of the triangle over next 2 months. Since then, the price movement has remained sideways, currently trading below the key averages and hence in the bearish zone. Looks like the next movement will be driven by Q2 FY26 results, which will decide the direction and momentum in the share price. The price earning multiple of peer companies with similar levels of profits such as Kirloskar Brothers, LG Equipments and Kirloskar Oil Engines appear at a comfortable level, giving them the advantage of market capitalization at a higher level, while Shaktipumps is below the peer average and remains almost a third away from the same, and that has hurt its market capitalization. For 2 years in a row, surplus from operations has been largely consumed by the rising receivables and buildup of inventory. Consequently, liquidity does not get the benefit of exceptionally high profits during the said 2 years. The first quarter of FY26 disappointed investors both in terms of revenue and margin. Revenue reported a single-digit growth, although slightly higher, but not significant enough, while margin lost out about 80 basis points. Investor sentiment was badly affected, as reflected in the subdued price movement during the period. As compared with the price earning multiple based on PAT and EBITDA 7 quarters ago in December 2023, the current price earning multiple appears at a level which is the lowest in the said 7 quarters. Company's growth guidance has not worked with the market, which eagerly awaits quarterly delivery as there are concerns based on the Q1 FY26 declared results. Business pressure is quite visible with competition heating up in the pumps segment, the risk getting enhanced with a major part at the mercy of state policy, a risk in the long run. Rising input costs taking a toll on the margins. The diversification program needs time as EV business might take longer as an evolving concept. Over last 2 years, the company has raised about 500 crores rupees through 2 qualified institutional placements. While this will partly fund the envisaged capex of rupees 1700 crore, there might be a big chunk of external debt, the cost of which might further weaken the profit, which is already under pressure. Raising working capital requirements and rising external debt might present themselves as two major challenges facing the company going forward. Rich experience, strong track record, environment policy of government is enriching the scope of business. QIP has strengthened the equity base and injected substantial owned funds, capex of 1700 crore rupees for backward integration, doubling of capacity and a big entry into EV segment. There is a lot of piggybacking on government schemes, patronage which is risky in the long run. The debt of over 1000 crore to be funded in the 2-year capex plan might force a substantial amount of interest, weakening the ultimate profit in the years to come. Hope you found this video on Shakti pumps to your liking. I am Vitthal Prabhu with the fortnightly video on Stock Learning Simplified. You can access similar quality videos at our info card. Looking forward to your positive feedback and valuable suggestions for improvement. Highly obliged for all kindness. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever required, may please seek the advice of a competent professional before taking action of any kind.